Late last year, myself and a few other callers had new money, and we didn't need it for anything in particular. And Dan said, well, I have no problem just putting that in a savings or a bond fund or whatever, inflation, and waiting to maybe as long as the middle of next year, which is the middle of this year now. And that's what I've been doing. Do you have any problem with that? Or I feel very comfortable doing it right now. Or should I be taking some of this new money and nibbling at some of this stuff?
Well, George, that's a great question. And of course, I'm a financial advisor and have to kind of, in general terms, for compliance reasons, speak to that because I don't know the full ramifications of your situation. But the thing that I keyed in on there that you said is that you feel comfortable doing that. So, that's a big question. Should I wait or should I not wait? I don't really know. Are you in retirement? Are you living off of the income?
We're fine financially. It is just extra money is sitting there, and sure, we'd love to eventually get some growth out of this over the next few years, but we're in no hurry.
Yeah. So I guess the broad answer is, if you think that we're going to have a dip in the market, and it is so hard to predict short term, and I will tell you right now, Dan is much better at looking at those things and being able to give a better answer than I am. But in general, when in doubt, I always dollar cost average. So if I think that things are going to get better in the next 6 months or the next 1 year, then I'll take a shorter dollar cost averaging approach to it. If I think that things are going to get worse, then I'll take a longer perspective. So let's just say that you want to try to be all in by the middle of the year. What you could do, it's very, very, very unlikely. It's possible, but not probable that you're going to catch the bottom of the market. It just very rarely ever happens. Dan always says there's no rich market timers on Wall Street because it's just too hard. So one way that you could do that is if you say, I want to be in by the middle of the year. Let's say we've got 4 months left. We'll divide up whatever amount of money you have that's going to go in over the next 4 months by 4 and pick a date. If you start today, make some good choices based on what you need in your asset allocation model. Put a fourth of the money to work. In exactly 1 month from today, if nothing significant has happened in the meantime, do another 1/4. I would say pick your time frame that you want to be fully allocated and go ahead and do it, because you're not going to get the bottom of the market. You're not going to get the top of the market, most likely. You're going to average out somewhere in between. And the thing about waiting is that if we wait, it becomes harder and harder and harder to go in. Because if the market goes down, let's just say, we think, we might need to wait a little bit more because the market's going to go down further. That's always kind of the news that we're hearing, that, things are going to continue in one way or another. If we see the market's gone up, then we start to feel like, dang, I missed out, well, I'm going to wait until it goes back down. So we get into this perpetual habit of waiting. So if it's truly a long-term goal, I wouldn't wait. I would start some kind of plan. Now, if you think over this next year, you think at the end of the year that things are going to be lower than where they are right now, well, take a longer time horizon. Divide what you have between 12 months and go in 1 month at a time. Now, if you see a decrease of 10% or 20% or 15% and you want to go ahead and accelerate that plan, well, then you've still kept some powder dry so that you can do that. You can go more in. You've also kept some powder dry, so to speak, to protect it from volatility. So you're not feeling as scared when you look at your portfolio and see that it's not down as much as, say, the market.
Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.